Well, the U.S. economy is slowing considerably, and earnings have been under pressure. And my guess is they will continue to be under pressure. But the real story, of course, is the Federal Reserve. And as I expected, it did not raise interest rates when they met last week. But I think what's got the market nervous is that they still don't realize that the Fed is only pretending to raise rates, because Janet Yellen still left an October or maybe a December rate hike on the table. At the same time, she talked about how worried she was about the global economy. So now you have investors worried that not only is the global...
Yeah. Hold on here, Peter. It sounds as though you're saying that the Fed is pretending. You're saying the Fed is putting on a con, but why?
Well, yes. Well, because the Fed wants to pretend that the economy is actually strong enough to withstand a rate hike. But they don't want to actually raise rates and prove that it's not. See, the Fed wants everybody to believe that what they did worked and we have a real recovery. But we don't. We have a bubble that is dependent on 0% interest rates. And so the Fed can't raise interest rates without pricking the bubble, and they don't want to do that. But they can't acknowledge the truth, so the game is just to pretend you're going to raise rates, but keep making up excuses why you don't do it. The market hasn't figured this out yet.
Haven't figured this out, but I mean, if that's the case, I mean, the market should love it, right? Or are we talking about the Fed pretending to the extent of QE4?
Well, they're going to do QE4. I mean, for the same reason they did QE3. The same reason they did QE2. They're never going to stop, just like a drug addict doesn't stop taking drugs, right? I mean, this is what the Fed is going to do. But people still don't understand. And that's what's hurting the global economy. It's what's undermining emerging markets, emerging market currencies, because everybody believes the Fed. And they don't realize that the Fed is just putting on a show to pretend that their program actually worked. But the U.S. economy is sicker than ever, thanks to the Fed. If the Fed were actually to deliver on the rate hikes that everybody thinks are coming, we would have a worse financial crisis than 2008.
Peter, just very briefly then, what's the money question? What do you do with your money then if you're correct and the Fed is, at the moment, in the middle of a con?
Well, I've been positioning myself in non-dollar investments. And, of course, as the dollar's been rising, the foreign investments that I hold have been falling in value in terms of dollars. I also own gold. Gold is starting to move up. I mean, I think gold looks like it probably has put in a bottom. We'll have to see. It was stronger today. It's up again this morning. Gold stocks, on the other hand, are the cheapest they've ever been. I mean, they're down on the lows. They had a horrible day yesterday, and even though gold was up today more than it was down yesterday, gold stocks were down again. So I've been buying those, and they've been going against me. But I do expect a spectacular reversal when people figure this out. Look, it took a while for the people who were buying subprime mortgages to realize that what they were buying was worthless. But eventually, the bottom dropped out of the market, and I expect the same thing to happen again when people figure out the truth behind the U.S. economy and what the Federal Reserve is actually going to do, not what they're pretending they're going to do.